Now that we have looked into the syllabus of direct taxes, let us now jump in to the syllabus itself, the first chapter, which is direct taxes at a glance. Now in this chapter what we will be doing is we will be looking at the introduction part as to how exactly the concept of income tax or taxation as such came into being, how exactly the concept of income tax or taxation as such came into being, the characteristics of taxes, canons of taxation, that is the objectives or principles rather of taxation, canons of taxes or rather the principles of taxes. Then we have objectives of taxation as to why do we need income tax or any other tax for that matter. Then we look at direct versus indirect taxation, because as you may be aware, indirect tax is the other part of the syllabus which also is there for 50 marks, which is nothing but GST now and CST and customs. Background of taxation system in India. How did the taxation system evolve in the country? Tax structure in India. What is the present tax structure with regards to various assessees? And the administration part, how exactly this is administered by the central government which looks after the taxation part. And lastly, we'll be looking at various statistics with regard to the direct and indirect taxes. If you look at the income tax or any tax for that matter, there is one thing which comes into my mind, which is if there is something certain in life, that is nothing but death and taxes. Death and taxes, the only two inescapable things in the life. You can escape from everything else, but death and taxes are for sure. They are certain to happen. There is no way any person can escape from death and taxes. You may say not everyone pays income tax. Of course, one will pay tax only if they are above a certain income limit. But what about the indirect tax? Every day when we buy a product, every day when we buy a service or use a service, we will be paying some type of taxes. That tax would be either sales tax or customs or something else. But now of course we have GST. The thing is, this is not something which is new. Taxation has been there since time immemorial. Back then the kings or whoever used to rule, they would collect taxes from their subjects. Those taxes of course would not be called as income tax, but essentially they were doing the same thing. For example, if there was a farmer who used to grow some crop, let's say paddy, and if he has grown certain amount of crop, then a certain portion of that would always be paid to the king or always be given to the king or the person who was ruling over that kingdom. So now what is this if not tax? So in this case you are giving something out of your income. So this is also a tax, but in those days it was not given in the form of money. But now it is given in the form of money. What we do is, out of the income which we earn, we make the payment to the income tax department of the government. So then of course they will use it for whatever purpose they wish to. But we should understand that tax is something which has been there since a long time. It's a levy. It's a charge against the income which we earn. I'm restricting myself only to direct taxes because indirect tax is a different beast altogether. We'll not go there for now. Okay. Now, let us assume that the government collects the taxes with good intentions. Now, what will they do with that amount which they have collected from us as tax? See, there are various things on which the government can make use. See, there are various things on which the government can spend the tax amount which they have collected from us. For example, tomorrow if the government, if they decide to wage a war against an enemy nation, then tomorrow, for example, if the government decides to wage a war against an enemy nation, then they will definitely use our money to buy defense equipment. So defense equipment, defense budget, if you look at it, it's a significant sector which consumes a lot of our money, that is tax money. So for that, the government definitely needs money. So how will the government get money? Through the taxes. Then the enforcement of law and public order. See, one of the essential duties of any government is to make sure that the law and order, is maintained. How will the government maintain law and order? For that also they need money. For example, if the government has to maintain law and order, there should be a department which takes care of law. There should be a department which takes care of maintaining public order. For example, we have police department, we have lawyers, that is public prosecutors, we have judges. Who will pay salary to all these people? It is none other than the government. So from where will they get the money to pay salary to all these people so that they can maintain public law and order? Of course, from our taxes. Then we have protection of property. Of course, this is largely taken care by state, not the central government, even the law and order part. But still, they need money. From where will they get the money to protect our property? Again, it is the tax money. Economic infrastructure like roads, enforcement of contracts, legal tender, etc., etc., etc. Economic infrastructure. See, in this case, for example, I'll just give a couple of examples. Roads, railway tracks, telecom. So all these comes under infrastructure. Now, if the government has to improve the infrastructure so that the public can use it, again, they will make use of the tax money. For them, the source is definitely tax money. Public works, it could be parks, it could be hospitals, etc. Social engineering, some particular project which the government has introduced for a particular sector or a particular type of people who fall within that economic background. Then operation of government itself. So now, government is a huge machinery. If you look at the number of employees employed by the government, it's such a vast number. For example, the biggest employer in the country is the government department, that of railways. So if they are the biggest employers, then probably the second and third biggest employers are also that of government. Look at any department for that matter. There will be hundreds, thousands of employees, and they are all paid very good salary. Their pay gets revised every now and then. That's why even to this day we have that lure of government jobs. Of course, though it has come down, thankfully. But still, if the government has to run its machinery, if the government has to make sure that it runs smoothly, then they have to pay the salary. If the government doesn't pay the salary, then who will join government services? Of course, the government will pay the salary, but the thing is, from where will the government get the money? Of course, from our tax money. Then government also uses fund for public and public welfare. Of course, then the government also uses for other things. So like education systems, we have government schools, government colleges. So how is that the government is able to start such schools and colleges? Once again, through our money. So then there are various healthcare schemes. Now we have Ayushman Bharat, wherein you can get insurance. And if something happens to you, you can always go and claim and get the money from the government if you are eligible for that particular scheme. Then we have pensions for the elderly. So there are certain limits, and of course the amounts will be fixed by the government. But the thing is, these schemes are there because we are able to pay the tax. If we don't pay the tax, the government will not be able to carry out any of these schemes. Then there will be utter chaos in the entire country. So it is very imperative. So it is imperative that we understand where exactly our tax money is going. If we know where exactly our tax money is going, or for what purposes the government is making use our tax money, then at least we will not crib when we pay taxes. We know that the government is making good use of all this tax money which it has collected from us, or which it will collect from us. Of course, how exactly the government implements all these schemes is up to the government of the day. Whether or not they implement it in a good way, or whether it does a shoddy piece of work, or whether they do a shoddy piece of work, then it is not up to us. Can we control that? Of course not. But is it our duty to pay tax? Of course, yes. So now these are the areas in which the government will definitely invest our tax money. These are just some of the few areas, in fact, some of the major areas in which the government will invest our tax money. It's not necessary that the government will invest only in these sectors which we just now looked at. It could be anywhere else as well, but these are a few of the significant areas in which the government will definitely invest. Now let us look at few definitions of income tax. Of course, you may wonder, is this very important from the point of view of marks, this chapter, that is introduction to taxes. If you look at it that way, it is very difficult to even guess as to from which chapter the institute will ask maximum number of questions. Every time you take a guess, the institute will definitely change the pattern the very next exam. Every time you take a guess, the institute will change the pattern in the very next attempt itself. So don't ever get into that guessing game of whether this is important from the point of view of exam or not. The moment you start doing so, you will get into the trap of reading select few chapters, and then you never know what the institute will do, and then you will be left wondering in the exam hall as to from which chapter this particular question has been asked. So let us not take that risk. Let us read every chapter as if that is the only chapter which we have in the entire syllabus. That way we will be able to cover the entire syllabus easily. And moreover, this is not such a big deal because the syllabus which you have right now has been largely cut down from the syllabus which was there earlier for direct taxes. Now the syllabus which we have is fairly simple. So I don't think there is any point in ignoring any chapter. And moreover, if you understand this chapter, the first chapter, then the understanding of the rest of the chapters becomes very easy. So that is the reason why we have this chapter. Of course, you may get questions from this. I am very sure you will. So that is also there. Added bonuses, getting marks from this chapter on top of understanding the rest of the syllabus. So let us look at few of the definition. According to Professor Seligman, I hope I am pronouncing his name correct, a tax is compulsory contribution from the person to the government to defray the expense incurred in the common interest of all without reference to special benefits conferred. There are various definitions given by various people. But the thing is, what exactly do we understand by tax? After going through various definitions, what I can say is, after looking at various definitions, we have come to this conclusion. Tax is a compulsory contribution levied by the government. That means what? A citizen of a country will have to compulsorily pay the tax. Compulsorily means the moment we add compulsorily, that means the citizen will not have any choice. Okay. Who will levy this? Is it a private citizen who is levying? Is it a company which is levying the tax, that is creating this charge? Definitely not. It is the government which is levying the tax from owner of income without direct benefit. See, when they say owner of income, what they are trying to say is, if you earn the income, you pay the tax. If you are earning income and someone else is paying tax on behalf of you, that doesn't make sense. Of course, they can pay tax on behalf of you by deducting from your income. But you as the owner of the income, or you as the earner of the income, you are responsible to make the payment of tax. Then, without direct benefit, but for public benefit. This is very important. Tomorrow, can we ask the government that last year I paid 1 lakh rupees of income tax. Now give me that benefit of 1 lakh rupees. Of course, this is not possible because the government doesn't work like that. When they collect tax, it's not as if they will set aside that 1 lakh amount only for you. If they do that, then they will not be able to run the country. Because government is for the entire population. So some part of the population they pay tax, that is especially direct tax. The rest of the population will enjoy that benefit. So there is no direct benefit. There is only indirect benefit. Now let us look at the characteristics of taxes. Tax is compulsory. As I said, you don't have choice. Death and taxes, no choice. Always compulsory. So it is imposed by law. Of course, we have a law here, Income Tax Act 1961, which imposes the direct tax. It is a compulsory payment to the governments from its citizens. We know that. Tax is duty from every citizen to bear his share for supporting the government. As we saw earlier, the government takes up various projects. As a citizen of this country, it is our duty to support our government by way of payment of taxes. If we refuse to pay, of course, the government will prosecute us, saying that you have earned so much of income during this year, but you haven't paid any tax, so therefore you will now be prosecuted. Of course, the various other punishments as well. Tax is a contribution. See, when we think of contribution, usually we think of voluntary contribution. But this is a compulsory contribution. Whether or not you like it, you'll have to still contribute. See, just like you contribute, someone else, your neighbor, your friend, your relative, they all contribute towards the tax fund. So which the government collectively collects from all of us, and then they will utilize for public welfare schemes. Taxes for public benefit. Will the government use this for something else other than public benefit? Of course, there are certain areas for which the government will use, but indirectly, it will always benefit the citizens at large. So therefore, citizens are required to make the payment of tax. For instance, the government may spend money on defense. You may say, I am not getting benefited from defense, but the thing is, who will protect the borders of the country? Of course, the army. If they are able to protect the borders of the country, then we will be able to live at peace. So indirectly, we are contributing the benefit of our own selves. No direct benefit, which we just now saw. Tax is paid out of the income of the taxpayer. Tax is paid out of the income of the taxpayer. You earn certain amount, you pay certain tax. Like we saw earlier, the farmers, they used to grow produce, and out of that produce they would give some portion to the king. Now, even if he is a farmer also, they will look at the income which the farmer has earned. Or even, let us say tomorrow you qualify as a company secretary, you earn, let's say, 10 lakhs per annum. Will you get to keep the entire 10 lakhs? No, a certain portion will be given to government, so that they will make your life comfortable by maintaining the law and order, for instance. Government has the power to levy tax, no one else can levy it. Tax is not the cost of the benefit. We have already seen this. We cannot say this is the benefit which you are getting, therefore we are charging so much. Definitely not. Those benefits are given by the government largely free of cost. Tax is for economic growth and public welfare. Again, it is for the general welfare. It's not for specific welfare of any person. So now, what are the main sources for direct taxes? Of course, every year the government presents the budget, so through the Finance Act, so that itself is the source when it comes to the rates, and that is the slab rates for the income tax for that particular year. Then we have the income tax rules. Income tax rules is nothing but the procedural aspects which needs to be followed with regard to the Income Tax Act itself. Then we have various notifications released by the Central Board of Direct Taxes for the proper administration. When we say proper administration, it is basically for the smooth flow of the work, both for the department as well as for the assessees. Various circulars. These circulars kind of acts as a clarification if there are any doubts regarding the scope or the meaning of the provisions. So we can think of those circulars as guidance notes. So of course, what is most important here is these circulars are binding on the department only, not on the assessee. That means if the assessee thinks that the circular is against the assessee, against the interest of the assessee can safely ignore it. Then we have judicial decisions. Judicial decisions pronounced by Supreme Court, that means the highest court in India. So if there are any such decisions, that will be binding on all the other courts in the country. So but whereas when it comes to decision of high courts, so it will be binding only in that particular state. For instance, if there is a high court ruling in Bangalore, the same might not be applicable for the Madras High Court. So that is there. So now let us look into all these in detail. So now let us look into the finance bill part. So bill refers to the proposals which is not yet approved by the parliament. So before it is approved, it is only in the stage of state of bill. Once it gets approved by the parliament, both the houses of parliament, and gets the assent of the president, it becomes the Finance Act. So now who will present the finance bill? It will be presented by the finance minister. If you have noticed, it was presented by Ms. Nirmala Sitharaman recently. And then there will be recommendations or suggestions considered and changes made to the finance bill. So now it will be made by the parliament. Once it is presented, it will be up for debate. So it will be debated upon, and if there are any changes which can be incorporated, such changes will be incorporated, and then once the parliament approves, it will be sent to president, and if the president gives his assent thereto, then it becomes the Finance Act. Now of course they have given the URL where you can check the finance bills for the various years. Not very important for us. Let us look at the things which are relevant for us. So the amendments made with respect to direct tax and indirect taxes in the finance bill. So in this case we are looking into the amendments made to the finance bill with respect to the direct and the indirect taxes. So when are the amendments applicable when it comes to direct taxes? Usually once the notification is published in the official gazette. So direct taxes can wait. So only upon notification in the official gazette will say this particular amendment has been brought into effect. Whereas when it comes to the indirect taxes, it is usually the midnight of the date of presentation of the bill. If the bill is presented on, let's say, 31st of July evening, so from that midnight itself, that means from 1st of August itself, the indirect tax proposals will come into effect. So there is no intervening period when it comes to indirect taxes, because once the proposal is made, it will be immediately applicable. Now let us look at the basic concepts of income tax, like which are the things which generally affect the tax provisions and tax implications. So first is of course the Income Tax Act 1961. Then we looked at the rules 1962, that is the procedural aspects. Then we have relevant Finance Act, mostly for the amendments if there are any, and also most importantly for the tax rates. Then we have notifications, circulars and clarifications issued by the CBT. We know that these are all binding only on the department and not on the assessees. Then we have judicial pronouncements. First will be Supreme Court, then next High Court, then the various lower courts. This is what is most important, the Supreme Court pronouncements. Now let us look at the steps which we need to follow to calculate the tax liability. The first thing which we need to do is determine the category of the person as to whether it is an individual, company, or partnership firm, trust, HUF, etc. Once we determine the category of the person, then we look at the residential status. So what is the residential status? Nothing but whether the person is resident or non-resident. So we will see in detail in a while as to what do you mean by resident and non-resident. So that is the second step, because the next step, that is the computation of total income, depends on the residential status. So certain incomes are considered as income based on the residential status. So that is the next step, where we look at the 5 heads of income and compute the total income of the person. Finally, once we are done with the above 3 steps, we calculate the tax liability, that is the amount of tax payable by the person. So these are the 4 steps which you need to keep in mind while calculating the tax liability of any person. Once again, to quickly revise, the first step is determination, the second step is determination of residential status, third step is calculation of total income, and lastly the calculation of tax liability. So now let us look at the first step in detail, that is determining the category of a person. We said person, but we did not say what exactly do we mean by person. We will now see what is the definition of person. Let us read this section 2, subsection 31. It says, person includes. So this word is very important. So here when we say includes, it is an inclusive definition. It is not an exhaustive definition wherein we can say A, B, C, D refers to person. No, it is not like that. In this case, they say it includes. It may include other things as well in future. We'll see how. So first, of course, individual. Then comes the Hindu undivided family, largely in vogue these days. Then companies, private limited, public limited, one person, etc. Then we have firms, AOP, that is association of persons, BOI, body of individuals, local authorities like for instance Mysore City Corporation, that is a local authority. So that also comes under the definition of person. Then they say every artificial juridical person not covered here, that is not covered above. So if there is any other category which can be classified as person, even that will be categorized as person. For instance, when the Income Tax Act was brought out in 1961, we definitely did not have LLPs. Now, The definition does not include LLP. So therefore what we'll do is we will include LLP under this last clause, that is every artificial juridical person not covered above. So individual. Now who is an individual? Individual is a natural human being, that is male, female, minor, or a person of sound or unsound mind. This is very quite obvious. We know who is an individual. Then comes HUF. As I said earlier, not very famous these days, but still we have this status as part of the act, so we will cover this. It consists of all person lineally descendant. So in this case, lineally descendant means, let's say there is a grandfather, then he has a son, then his son, grandson, then his son, great grandson. So they are lineally descendant from a common ancestor. Who is a common ancestor? Let's say this grandfather A, and includes their wives and unmarried daughters, and also a stranger who has been adopted by a family. So as now the exam type has been changed to objective type, MCQs, these type of definitions might be very important, because you never know what kind of questions the institute might ask. So they might ask something related to whether the stranger is part of the HUF or not. Now that the institute has changed the scheme of examination to objective type, so you should be careful about definitions like this, because they never know. You never know what they might ask. So they might ask the definition based on this particular point, that is stranger, whether a stranger is part of the HUF or not. So stranger will be a part of HUF, though he is not lineally descended from any of the ancestors. So here what we are worried about is common ancestor and their wives, and includes a stranger. So here there are two schools in this, two different types of HUF. One is Mitakshara, the other one being Dayabhaga. So what we have to remember is Dayabhaga is applicable only in West Bengal and Assam. Elsewhere, only the Mitakshara school of HUF is applicable. Just remember this much: Mitakshara applicable everywhere except for West Bengal and Assam. Dayabhaga only in West Bengal and Assam. Now let us move on to the next category, that is company. So it includes a domestic company. They say basically what we have to remember is any Indian company that is set up in India, or any body corporate, in other words it's again a company, by or under the laws of a country outside of India, that is a foreign company. So these type of companies also come under the definition of company. Any institution, association, or body which is or was assessable or was assessed as a company for any assessment year under the Income Tax Act 1922. That means even before this 1961 Act was set up, if there was any other company which came under the Income Tax Act 1922 as a company, even that would be considered as a company, especially the old companies established before independence. Any institution, association, or body, whether incorporated or not, and whether Indian or non-Indian, whether incorporated or not, whether Indian or non-Indian, which is declared by general or special order of the board to be a company. That means even though it is not incorporated, whether it is Indian or non-Indian, as long as it is declared by special order of the board to be a company, then that will also be considered as company. Basically what we have to remember is we have only broadly two categories: Indian company and foreign company. So those two categories of companies also come under the definition of person. Next, firm. Firm, as we know, is nothing but a partnership firm, whether registered or not. So some firms are registered, some are not. Both come under the definition of person. So irrespective of the registration, they will be included as assessees or persons under the Income Tax Act, and shall include limited liability partnership as defined by the LLP Act 2008. That means this wasn't there earlier. Now they have included LLPs as well. So according to Section 4 of the Partnership Act 1932, persons who have entered into partnership one another are individually called partners and collectively a firm. There is nothing but the definition of the firm. So what you have to remember is firm, including LLP, also comes under the definition of person. Association of persons. The word person here is very important. Two or more persons join in for a common purpose or common action to produce income, profits, or gains. See, it's very clearly mentioned that it is two or more persons. Again, once again, as we just now saw, persons could be anyone, not necessarily individuals. They could be HUF, company, firms, or anyone else, as long as they come under the definition of person. And here the object is also very important, that is to produce some income. It is not enough that they simply come together and receive the money. They should have objective of, let's say, profit motive. There should be some profit motive or some income motive. Unless we have such motive, we cannot call them as association of persons. Then we have something which is very similar to association of persons, body of individuals. But again, the word individuals here is very important because it is only restricted to individuals. So it cannot involve anyone else. So only individuals can be members, individuals can join together for a common purpose. So now that we have looked into both AOP and BOA, that is association of persons as well as body of individuals, is there any difference between the two? The difference here lies in the definition itself. In case of association, it implies a voluntary getting together for a definite purpose, as we saw above. Whereas in case of body of individuals, it would be just a body without any intention to get together, but it should be body of individuals. Whereas in case of AOP, it could be anyone, including artificial juridical person. Then comes the local authority. Once again, even this is included, as we saw earlier, corporations like MCC or BBMP. So all these come under the category of local authority. And every artificial juridical person not falling within any of the above categories. Let's say there is a new type of person which is incorporated or which comes into existence due to some new act. Even that will be considered as a person under this clause. That is every artificial juridical person not falling within any of the above categories. Now let us move to the next section, that is assessing. Section 2, subsection 7. In ordinary language, a taxpayer is an assessee. He may be the person of any of the above categories, that is the ones which we just now discussed. But according to section 2(7) of the Income Tax Act 1961, assessee is a person by whom any tax or any other sum of money is payable under the Income Tax Act. So once again, who is an assessee? Who pays any tax or any other sum of money. So that means as long as you pay some amount of tax or some money in whichever format it is, you will be considered as an assessee according to section 2(7). So it is very clearly mentioned that it includes every person in respect of whom any proceeding under the income tax has been initiated. So even if you haven't paid tax, and if some proceeding has been initiated towards your income or fringe benefits, the benefits which you get out of your employment, the income of any other person in respect of which he is assessable. That means, let's say one Mr. A is a non-resident, and he has entrusted the responsibility of his tax payment to Mr. B. So Mr. B is in charge of Mr. A's income tax responsibilities. Now Mr. B will be considered as an assessee. So since Mr. A is non-accessible or he is not here, B will become the assessee here because he is liable with respect to Mr. A. And the loss sustained by him or any such person, the amount of refund due or any other person. That means proceedings should be initiated towards the loss sustained by him. If the income tax department has any doubts regarding the loss which he has reported, even then they might initiate proceedings. Then the amount of refund due to him or to any other person. So if there is any proceeding with regard to the refund due, let's say there is an assessee who has claimed huge amounts of refund, and if the income tax department suspects such return, then they might initiate proceedings. In all these cases, even though you haven't paid tax, or even if you have paid tax, then anyway you will become the assessee. But if you haven't paid tax, then by these circumstances you will be considered as an assessee. And who is deemed to be an assessee under any provision of the Income Tax Act. As long as some provision of the income tax says you are an assessee, you will be considered as an assessee. Who is deemed to be an assessee in default under any provision of income tax. That means you are supposed to do something but you haven't done something. So in such cases you will be under default, and then also you will be considered as an assessee. Accordingly, assessee is a person by whom tax or any other sum is payable under the Act. What is this any other sum now? They say it could be other sum of money as well. So the any other sum or other sum of money part refers to any fine payable, any interest payable, if there is any penalty other than tax payable by the assessee. So even in such circumstances, the person would be treated as an assessee. Person to whom any refund of tax is due under the Act. That means your tax liability was only 10k and you instead you paid 11k. In this case, 1k is the refund which is due to you. Even then you become the assessee. Next, if any proceeding under the Act has been taken against any person, proceeding under the Act, that means it will be initiated by the Income Tax Department. He is also an assessee. So it should be initiated on the provisions of this Act, that means Income Tax Act. In other words, a single inquiry letter issued by the Income Tax Department, if they are not referencing any specific provision, then it is not any proceeding. For example, let's say they will ask you to file the return of income. File the return. Last year you had filed, this year you haven't filed, return. File the return. In this case, if they quote any section like 139, then that will be considered as proceeding, because there is a reference to a specific provision of the Act. If there is no reference to any specific provision and simply there is an inquiry letter sent to the person, then he or she will not be the assessee. Now that we have looked into the assessee part of the definition, let us next move on to the assessment year.